Good morning. This is Mayor Valensky with Driving Markets. Let's have a look at what was driving markets yesterday and what will be driving markets today. So yesterday, the big number coming out that everyone was looking for was the CPI, Consumer Price Index, which is the retail price inflation in the United States, expected to come in at 3.3. Remember, there's been an uptick in inflation. I've been saying this already for a while. Inflation is going to start ticking up from the lows in the US of 3% reported last month. It came in at 3.2%, so lower than expected. Markets initially jumped up dramatically, and it looks like we're going in for a major blue day as far as rising prices and rising asset prices in the US and across Europe. However, it became very clear that since inflation is ticking up, then what you're going to have is you're going to have fears going forward of the Fed raising rates again. I think it's unlikely. However, there is that fear. All depends where inflation is going. And obviously back to the drawing board regarding the last downgrade of the US banks. In addition to that, looks like markets have maxed out the recent rise from beginning of January all the way through to now. Remember, the markets rose on the back of AI, artificial intelligence, and ChatGPT in the tech sector. And now they're looking very, very overvalued. It looks like the markets will have to take a short-term or near-term correction of around about 5%, maybe 7 to 8%. Short-term, near-term. It doesn't mean that the uptrend is broken. It just means generally there'll be profit taking, and the shares are not only fully valued, they're overvalued or effectively overbought. So you can expect Nasdaq, the tech sector, to continue falling, even though there are some results coming out like Nvidia. Nvidia, in my opinion, is well overpriced, well overvalued, and therefore you are going to see some sort of correction within the tech sector, and that is going to drag down the other indices, the S&P, the Dow, Russell 2000, Europe, the DAX, and the FTSE. So take that into account. We've got an overvalued, overcooked market, and there needs to be a pullback of some sort. Shares that I'm looking for a pullback is Apple. I'm looking for a pullback. Meta, I'm looking for a significant pullback. Nvidia, I'm looking for a pullback. Amazon, I'm looking for a slight pullback also. And Tesla could go either way. As far as Tesla is concerned, it could go down to 225 short term, or could hold here at the 245, 250 level, then move on from there. Other one to look at on foreign exchange traders, is dollar yen. Remember, throughout the year, I've been saying, or throughout the beginning of the year, I've been saying dollar yen is a buy. It floated down all the way to 130, 128 around about November, January this year. And then I said it's a buy from there. It's moved all the way up to 145. Above 145, you will get, most likely get the Bank of Japan intervention in the foreign exchange markets, because that would be too much of a devalued yen. However, I think it's going to go to 150, even 155. Looking at gold, gold's at 1915. Looks like a buy at these levels. Looks like it's going to move up. It is range bound between 1900 and 2000. But I expect gold in 2024 to be around about the 2400, 2500 level. I think gold is a really major buy, especially if you're looking for a safe haven protective mechanism. Gold is one of those safe havens. Looking onto pound, cable, pound dollar, I'm disappointed that it's come down to 126.5, but that could be a fears of recession in the UK and possibly stagflation with rising prices and no growth. That's one of the reasons why the pound has come off. But I do expect the pound to stabilize around here and to move back up to the 130 level on cable. That's pound dollar. As far as euro dollar is concerned, the euro is under pressure, and euro will be ranging between 108.5 and 110.5. That's the range on the euro. Those of you who are FX traders. Crypto, Bitcoin, interesting, has moved up to the 29,500, looking to breach the 30,000 level. And there's a hell of a lot of impetus to do that. I don't think it's got it in it. I think it's going to float back down to the 25,000 level. There's something going on in the crypto sector that's not allowing Bitcoin to move up. So keep an eye on that as we move forward. Overall, macroeconomics, you're probably going to have, as I said, a trending down market. The central banks are pushing forward with this CBDC, the central bank digital currency. Interesting point regarding Donald Trump. The more indictments that are put against him are pulled out, the more his ratings go up and the greater the chance is of him becoming president in the US. Something needs to happen because you can't have an 82 or 83-year-old effectively mentally and practically physically disabled president who doesn't know where he is running the biggest economy in the world. It's just a joke, and things need to change there. So those viewers who are obviously anti-Trump will give me some pushback on that one. I'd be interested to have your feedback and see which way it is going. This is Mayor Valensky with Driving Markets. You can share, subscribe, comment, buy my book on Amazon. Catch you later.